Hello guys, welcome back to the channel. Today I'll be discussing about supply and demand zones, how I market, and on what is basically the criteria on the basis of which I personally decide what are exactly the zones and which zone will work, because there are n number of supplies and demands in like the charts. So you have to prioritize your area. So I'll be giving you a criteria on the basis of which you can decide personally, and also you can use them to trade as well, right? So before we start, just a brief about what exactly is supply and demand. Basically, supply is the area from where the sellers comes in the picture, and demand is the area where the buyers comes into the picture. And it's basically a zero sum game. So there are equal number of buyers and equal number of sellers present in the market all the time. It can be when the market is moving up, the buyers are more aggressive, and when the market is coming down, the sellers are more aggressive. Not because there are more number of buyers and when the market is going up, and not because when the market is going down there are more number of sellers. It is a zero sum game. When it has to go up, there if somebody is buying, somebody should sell, right? Okay, so yeah, demand and supply will basically helps you identify to determine the footprints of the big players, right? So basically, we retailers do not have enough capital, enough money to move the markets, right? Basically the FIIs and DIIs moves the market, the foreign investors and the domestic investors, those people moves the market, right? So basically, how the market moves is in the upward direction, like this, higher highs and higher lows. So this big move is not possible from a retailer's end. It only happens when a financial institute places their orders, right? So what happens is when the market is going up, the institution has placed this order right over here, right? Right over here. I'll show you. Some orders are placed right over here in this zone. So what the market makers will do, it will push the market up, and they are placing orders in lakhs and millions of quantities, right? So it is not possible from their end as well to place all of the orders in one go. So what they do is they place some of the orders here, and then the market goes up. And when the market comes back to this area where they exactly place their first order, then they place another lot of the orders, and the market moves from there. So basically, this is the area which we are looking forward to, and from where we can mark our demand zone. So this basically becomes our demand zone in an uptrend. And likewise, when the market is going down in aggression, when the market comes here, we mark this as a supply area. So this becomes our supply zone, right? And this becomes basically our demand zone. So I'll show you that on charts as well, because this is not how it looks. Basically, this is very easily that I have drawn, and you can see easily that how exactly it is here, and then it comes here and goes up. But it's quite difficult to identify in the real market, yes. But obviously, there are criterias on the basis of which you can identify easily. So the first criteria on the basis of which I identify the demand zone and the supply zone is the strength of the move. So what exactly is the strength of the move? How powerfully the market has gone up or the market has come down. So clearly, if you see this picture, let me remove this. If you see this picture, you can clearly see the aggression, the strength in the move in this figure, right? Clearly, the market has gone up way better than these two figures, right? Market has gone up here also, but this is a not as comparatively as strong as this area. So this becomes our demand zone when the market is going up, and likewise you can identify the supply zone. The market is coming down, the strength of the move, you can mark that last buy to sell candle. So this is basically the last selling candle before the buying has come. So this becomes our demand area. And likewise, when the selling is happening, last buying candle becomes the supply area before the selling has started, right? So here, if you can see, this buying has come after this selling candle. So this is our last sell to buy candle. So this becomes our demand zone. And when the market will be retracing, so you have to wait patiently, and you have to see the way the market is coming back. So this becomes valid when the market is coming back in a corrective manner, right? From here you can look for your continuation. And also, if see, this area won't work if the market has gone up in strength and has returned in strength, the same strength it has gone up, the same strength it has come down. So this area will not be as valid as the area where the market comes in the same in this corrective manner, right? Okay. And now the second criteria on the basis of which the supply and demand areas can be marked is the failure of previous demand zone. So what I mean by this is when the market is going up like this in aggression, and when so just give me a minute. So this becomes our initiation of this. Market comes back like this. From here the market began to move up, so this becomes the last selling candle before the buying comes. Now when the market comes back, and breaks this area, so this is the failure of this previous demand zone, right? Now whichever the buying candle which broke this, the last buying candle which broke this demand area, becomes our supply area, which is also called as a flip area. So here will be, this will be a red candle over here which exactly broke this, and above that will be a buying candle. The last buying happened before this broke this, so this becomes our last buy to sell candle, and this becomes a flip area, and it is also known as the supply area. So the previous failure of the previous demand zone. So likewise, if the market is moving down like this and we have an up move, right? So basically this was the initiation of this supply area, right? And but what happens is it fails. So whichever selling candle will be here, like the market will move up like this, the markets will move up like this, break this previous supply area, and whichever previous selling candle we'll be having, that will become our sell to buy demand area. I hope you got this point. So whenever the market will retrace back in a corrective manner over here, you can look for continuation logs. So basically that is how you can identify on the basis of this second criteria. Now the third criteria that is there is the freshness of the zone. What is the freshness of the zone? The areas which are still not mitigated in the continuation of this. What is freshness of the zone? So basically when let me remove this first. When the market has gone up from here, leaving this as our demand zone, when the market comes once, tap this area and move up, so this becomes our next demand zone, right? From where the market went up. So this is still the fresh zone. This has been mitigated. If the market has to come down, it has to come up here and then it has to go up, right? So likewise, there will be certain demand and supply zone in a continuation upside and also in a continuation downside. So the areas which are still fresh, which hasn't been mitigated, so you can mark those areas as in the continuation. I'll show these things in chart as well, but let's first basically understand the theory behind it. So if the market is doing this in continuation, every up move before the down move has certain demand or supply area. So this will be a supply zone, this will be a supply zone, this will be, I don't know what happened, this will be a supply zone, this will be a supply zone. So once the prices touch this is no longer valid. Okay, so if the prices are coming back again, there are chances that it can break this and come up here if it has been mitigated earlier. If it is not mitigated, it can probably come here like this and went down. So you have to look the freshness of the zone while identifying those areas. So first is the strength of the move, how quickly the market has gone up or has come down. Second is the failure of previous demand or supply zone. If this area has been mitigated once and then it has been broken, now this becomes a new area. It will be opposite in the upside, and you can likely mark this areas on the buying and selling zones. So, and also another third criteria is the freshness of the zone. Okay, so these are the criteria on the basis of which you can identify the demand and supply zone. Now I'll hop onto the charts and show you how exactly you can identify on the chart, because this is quite easy to understand on the diagrams, on the figures, but yeah, on the charts it becomes quite messy to identify good zones from where exactly the market has gone up or gone down. So let's hop onto the chart and just give me a minute. Yeah. So this is a Bank Nifty chart on a daily time frame. Let me just remove everything. On intraday basis, we first, obviously, if you haven't watched the video of market structure, you can go and watch the video of market structure, how the market moves, and where exactly the markets are heading. So on the basis of which you can identify your direction towards the market. On the that, then only you will be able to probably mark the correct demand and supply zone, right? So the market structure video is equally important. Actually, the foundation of this particularly smart money concepts idea, it is basically the foundation of it, right? So on an intraday basis, we actually consider a daily time frame. You can look and have a look where exactly the market is situated. But yeah, 4 hours is the most important to understand. 4 hours, 15 minutes, and 1 minute that I personally use, right? So just give me a minute. Yeah, 4 hours, 15 minutes, and 15 minutes and 1 minute is basically I use. 4 hours, basically the time, the prices are fractal and it always follow the higher time frames intentions, right? So what exactly, if the markets are following what in the higher time frame, whatever it is doing, it has to come to 15 minutes and then to 1 minute, right? So you do not trade directly, you jump to 1 minute and then you start taking trade in whichever direction the 1 minute is doing, because see, 1 minute will be going crazy. 1 minute will go up, 1 minute will come down, 1 minute will do anything that it has to do. But what is 4 hours doing? And also there is a concept of, again, I have also explained that concept in my previous one of my previous videos, which is the concept of uh, premium and discount, right? So you have to mark those areas as well, where exactly you can look for shorts and from where exactly you can look for longs. What exactly is premium and discount? I'll tell you. First we need to understand what premium and discount is, then we'll hop on to the charts and basically we'll identify the demand and supply zone. So see, in this leg, if we mark this area from top to bottom, this becomes our, this area is the discounted area, this is the premium area. So whenever you are selling, you don't want to sell at a cheap rate, you want the prices to be on a higher side, on uh, where you can probably earn more profit if you are selling, because you need prices to be on the higher side as well, right? So if the prices have gone down, wait for the prices to retrace back to its premium area, then look for confirmations, mark your areas, and from those particular areas you then take trades in the downtrend. In an uptrend, if the market is going up, you again take this Gann box, you mark the low, you mark the high, you wait for the prices to come to the discounted area where the prices are cheap, and then you buy and you sell it on a higher prices. You buy over here, you then wait for the prices to go up, right? So right now what the market is doing, it is continuously halting over here. So this is basically where the market is right now. So now let's drop to 15 minutes time frame and try to figure out demand and supply zone. See, basically Indian markets follows price action in a very beautiful way, but if you will go to the forex charts, the Euro USD, the Gann, the GPY, these charts will show you prices. They go very beautifully, right? So I'll just show you in Bank Nifty, because we are talking about the Indian markets right now. Let's not complicate more things that it is already. All right. So let's see few example of demand zone. from where exactly the prices have moved up, right? Let's mark this area. See, market did what? It went up, came down, went up, came down, and it's going up, right? So in this area, this is the last selling candle before the buying has come. Which is the last selling candle? This. There is aggression in the market. The first criteria is the strength of the move. Second criteria is the failure of the previous demand and supply zone. So this is not a failure. This is the fresh zone where the market has come and then it has gone up. So we mark our area on 15 minutes. Then what we do is we wait, we go down to the 1 minute time frame, and then we look for entries. That is the topic for some other videos, but right now we are understanding how to mark these zones from where the market can push up higher. So in some other time frame, this is also basically a supply, or sorry, the demand area. The market has gone up and then pushed up higher. If I move to 5 minutes time frame, this will be a good area from where the market has gone up. Okay, we were here on 11th of November, so I think we will be having, no, we don't have any trouble. So see, this is the last selling candle from where the market has moved up. So prices comes back in a corrective manner, and from here the price has gone up again, right? From wherever the prices are going down, it will tap that area if it is in a corrective manner, and then it will go down, because there are millions of orders that are punched over here in order to move the market up. So if this has to break, these people who have bought over here will face huge losses. So it doesn't happen all the time. Basically, from where the market has shown strength, prices will come back to that area, and prices will go up from that particular area. So if we go to our exact thing, prices have moved up, come down to the discounted area, and again it has moved up higher, right? Let's take another example where the market has shown some strength and moved up higher. So there are n number of examples. If you can see, this is the strength, but this area is not to be considered as a valid area because the strength of the down move is also pretty aggressive, right? So see, this area where the market has shown some strength, this is particularly a demand area, demand zone. This is the last, we are in 5 minutes time frame, so we'll hop on to 15 minutes time frame and then we'll look. Also 5 minutes also, and 15 minutes also, it's visible like exactly the same. Yeah, so see, market is here, it has shown aggression like as we saw in 5 minutes time frame. Okay, as we saw in 5 minutes time frame, 29th, market came back in a very corrective, pushed up in aggression, came back in a very corrective manner, didn't exactly. So this is where patience comes into the picture. You don't have to be too aggressive, you have to wait for the prices to come. If it is not coming, let the prices go and do whatever the shit they want to do. Just wait for your area to hit, and then you'll get good risk to reward ratio, good trades. It's a game of patience, to be honest. So I do not take entries on 5 minutes or 15 minutes. I precisely go and take entries in 1 minute. That I'll explain it in later videos. So this is basically how we mark the demand and the supply area, right? So the market has come up, it went up on 28th, it what, less than a day took to went up, and then from 29th it is taken around about more time, yeah, another day to come back. So this is a very good zone. It is fresh, strength of the move is there, and it is a valid zone. This is also a valid zone, you can say. This is also a valid zone which hasn't been mitigated. This is a selling candle before the buying happens, and it has also given some reaction, right? Prices came back in a corrective manner and then it pushed up higher, but it didn't continue. So the prices came back here. This is basically where the liquidity comes into the picture. There is another concept which also I'll be talking about in a later video. This is a liquidity concept where the stop losses of our retailers are present, where exactly the market has to hunt. We call it at hunting stop loss, and often happens from wherever the retailers think that the market will go up, it doesn't, and it just takes them out, and then it starts to move in the direction, right? So in the selling market, so this is the aggression in the 5 minutes time frame. You see, this is the aggression. This is the last buy to sell candle. This is the buying before the selling has come up. This is the fair value gap. It is also considered as one of the criterias on the basis of which you can mark the zones. Yeah. So the market came up, it went down. Again, market came up, took the stops. This area, it went down. If I hop to 15 minutes time frame, see, this is the buying candle before the selling happens, and it has gone down from there. This is the buying candle before the selling happens. Market came up and then it went down. So this is all the supply zones. This is all the supply zone. This is the demand zone from where exactly the price. This is the last selling candle before the buying comes into the picture. So this is basically how you can mark your demand and supply. See the aggression, prices retrace in a corrective manner, reacts from the supply zone, and it breaks. So this becomes the flip area. If whenever the prices will come here, it will show and give us some reaction. This is unmitigated still. So if we go to this, prices will obviously show respect to this because it was unmitigated, and it will show some reaction. And if it fails, it fails, because this is again a very aggressive move. So we will not consider this zone. If the prices would have retraced in a corrective manner and not with this strength, then we would have definitely considered this area. So right now, see, the selling has started. This is a very good area from where we can look for, we can mark this as supply zone. This is also a very good area. Prices have been tapped, and we'll see if the price have tapped here in the later part. Just we are marking the demand and supply zone. Last buying candle before the selling comes, last selling candle before the buying comes. So this is again also, you can mark this as a demand zone, right? Why it has failed? See the aggression. It went up, went down quickly. It would have worked if the prices would have retraced in a corrective manner, but it hasn't. Okay, so this is again one of the demand areas which is still not mitigated. We'll see if it has mitigated. It is mitigated over here. This was again one area which wasn't mitigated, and it mitigated, and see how beautifully it has come down. It has taken some time to come up in a very corrective manner, and then it has fallen down. And from here right now where we are, it is reacting from a demand zone, and it is going up. So these are not small points. If you consider this is like 1600 1700s of a downfall. And if in intraday, if I have to tell you, this is an intraday move, 600 500 points. So this is some great decent points. So see, this is also again the last buying candle before the selling started, before the aggressive selling started. So this is how you can mark the zones, right? everything. See, I was also telling about the continuation. This is again unmitigated supply area. This is mitigated, I guess. Yeah, this is also unmitigated supply area. In a downtrend, this is mitigated, so this is not valid anymore. This is kind of mitigated. No, this is also not mitigated, so this can also work, but then yeah, there is some thing over here which has mitigated. If I drop down to some other time frame, it will be, this is mitigated, this is not mitigated, again this is unmitigated. So likewise you can mark. So see, not every demand and supply will work, but yeah, you have to also work out on the criterias and then you can decide. So this was again a very beautiful demand zone from where the market could have moved up, but it failed. Why? Because see the aggression. See the aggression, how the market has come down within a quick span, and look at the candles. So it failed. This worked because this was unmitigated, and look at the strength, how it went up, and it has taken some time to come. It is also aggressive. I am not saying it is not aggressive, but yeah, it has taken quite a few days to come up over here. So we are getting certain reaction. I'm not saying this will work and market will break all of these supplies and straight away started going up. We'll see how the prices develop, and then we'll probably consider and taking some few trades. So right now, if I have to consider this as our leg, this as our leg, so this is where the market is right now. So this is our discounted area, this is a premium area. So right now here we are not looking for any kind of selling thing. We will wait for the prices to come and retrace somewhere in the premium area, and then we'll look for if we get any shorts. Right now we can plan for whatever buys we are getting in order to that will be a counter trend trade, because in 4 hours we are in a bearish trend right now. This is consolidation basically, but we are in a downtrend. Yeah. So I hope you must have gotten how to mark these demand and supply areas, and probably not exactly I'm telling you to trade from these areas, because there is a lot of other things as well which has to be combined with those areas in order for them to work. Yes, but this is something which you can try for yourself. You can back test how well it works, how exactly it reacts from the demands and how exactly the prices reacts from the demand and supply areas, so that you can get a basic understanding of the supply and demand zones, right? So there are a few other concepts which I'll be discussing in later videos. That's it for this video, and hope to see you soon. Thank you. Have a nice day. Okay, bye bye.